Okay, welcome back, subscriber. I want to do a year in review on the $100 a month portfolio. So here we have, take a look at it here, and let's go 1 year. So starting January 2nd, we had $39.85.26, give or take, and we ended up the year right here with $62.28.11, giving a difference of $2,242.85, which is pretty good considering that we put $1,200 into the portfolio, so about $1,000 increase on that. One thing I want to point out is same thing I pointed out in a previous video, is between January 2nd, where we have $39.85, let's call it $4,000, and somewhere around May 29th or so, we're at $4,011. So about an $11 increase in those 6 months from January through June, all the while putting in $100 a month. So some people are going to see that, they're going to stop investing. You just have to stick with it, keep putting the money in. A big reason for that essentially flat line is the ever volatile Tesla, and I think that's a big reason for the increase from 4,000 in June up to where we are today. Tesla is very volatile, but I'm a big believer in Tesla, Elon, all that. So I think every portfolio should have some Tesla in it. All of this is simply just putting in first and the 15th, $50, letting M1 distribute those funds. What I do plan on doing for the coming year, if we can go over here, is coming back here. On the 1st and 15th, I will be buying $25, putting it into realty income, and I will be doing that for a couple of reasons. If we come back here, we see that I'm down 8% on realty income, so meaning that my average $58 is above the current price of $53. So I will be putting $25 on the 1st and 15th into realty income, getting my average price down and hopefully increasing my yield. So that should give me approximately 30 shares by the end of the year, which is what I want to get to. If we come and look at the current portfolio yield is 3.25. If we subtract Tesla out of that equation, the yield is about 4.8, which is not that bad. So really, in a nutshell, that's the wrap up. The next thing I would like to talk about is something that nobody is talking about now, although 8 months ago, 10 months ago, everybody was talking about the Walmart stock split. Nobody's talking about Walmart anymore. Now it's all Palantir. But I want to talk about Walmart. Let's look here. So in February 23rd of 2024, they did a 3-for-1 stock split, meaning if you had 1 share, now you have 3 shares. This chart's pretty interesting. If you had 100 shares during the IPO at $16.50, you would now have 614,400 shares with a cost per share of less than 1 penny. Insanity. People are talking about creating wealth, generational wealth. this is it right here. Buy some Walmart and just keep buying it. I do have Walmart in my portfolio right here, a little 13 and a half shares, adding to that as I can. But we're here to talk about the split. So if you were holding then, the share price on that date was $175.56. 3-for-1 split brought it down to $58.52. So you had one share at 175, now you have three at 58, and those three at 58 are now three at 90.35, an increase of about $120, which means without the split adjusted price, Walmart would be about $2.95 today. Understand it's not the highest yielding stock, but I still do like it, still buying it, and it's one that I hope to eventually have just 100 shares, get to 100 and just let it burr on its own from then on out. Similar to what I've done with Ford. Ford got 200 shares, which means I get about $30 in dividends every quarter, and at an average share price, I think it's sitting around $9. So it's going to get me 2 to 3 shares, 2 point something every quarter. So Ford is on its own. It's now growing on its own every quarter. That's where eventually I'd like to get with everything. But my next target is Walmart, getting to 100 shares and just letting it ride from there. You know, not an in-depth analysis, none of that. I'm just telling you what I'm doing. I like Walmart. Let's get to 100 shares. And I'm just showing you with the $100 a month fund, which I just started January of 2021. So 4 years ago, essentially put $4,800 in there. Now worth 62. Do some quick math. So 1,400 divided by 4, 357 increase per year. I'm just showing, I hope you can find $100 in your budget every month to invest. Doesn't need to be complicated. Doesn't need to be these 5 stocks. Can be anything you want. I'm sure people are going to recommend an ETF, which is fine. I have a high risk for high tolerance risk, or high tolerance for risk. So I'm just going with these stocks, no ETFs. I don't care what you get, just please get started. Get those dividends averaging about $16.79 a month. So including my $100, my portfolio is now investing $117 a month. So please get started. That's it, short and simple. I'm going to try to do these at least once a month. If there's anything you'd like to see, or you want me to talk about, let me know. That way I will have some direction on where I need to go, and we can get you started. And I hope your portfolio is coming along.